Hello traders, this is going to be a deep dive into data. Today we're going to find out what is the best possible indicator to use through backtested data. The data that we're going to be looking at today has been tested for 389 days, and it's a collection of 112,000 5-minute candles. And what we're going to find out is test a bunch of indicators and see when certain indicators reach certain thresholds, what tends to happen to price. And with a data set this large, I think we can make some good headway. So I made a video like this before, I think about half a year to a year ago, but I want to update it because I think that this is probably a collection of the best indicators in all of crypto. That's just my best way of saying it. So without further ado, let's dive in. Number one, global accounts, global accounts long percent. What are we looking at? The global accounts long percent is looking at any trader that holds a futures position on Bitcoin, on Binance Futures. What percent of accounts are long and what percent of accounts are short? Now, for people who know open interest, you're probably saying, oh, it's got to be 50-50. Open interest will always be 50-50. Now, what that means is if there's $100 million worth of longs and there's $100 million worth of shorts. However, the makeup of those longs and shorts are not going to be equal. I mean, they could be, but they very likely won't be. You could have 30% of the crowd holding 50% of that open interest long, and then you could have the 70%, short. And that is what we look at to see what the herd is doing. Now, here is what we found out. When global accounts long percent is 62% to or higher, that means that 62% of traders who hold futures, Bitcoin futures, are long. Price tends to fall on every single time frame. On average. So what that means, as you can see here, what that means is that it's generally a good strategy to buy puts or to even to enter into a short whenever the long percent is very, very high. That's something that I've been talking about for a year or two, but I think that too many people give weight to like RSI and other technical indicators when they should probably just be looking at this, because this is just making sense. And you might wonder, well, why? Well, price tends to move to the path of most pain. And if the majority of the market, the majority of the people in the market are long, like in this example here, then the most pain is going to be moving down and hurting them. And that's why you see on every single time frame, on average, price falls. Let's do the reverse. Whenever sentiment is below, let's say 52, that means that majority of the crowd is bearish. If this was at 40%, that means 40% are short and 60% are long. Look at that. Isn't that beautiful? Let me explain. Well, 24% of occurrences, we can do better than that. So basically, whenever the crowd is mostly bearish in the past 389 days, mostly into shorts, price rises on average every single time frame. This just kind of shows that price is like basically just gunning to hurt as many people as possible. Look here. After 5 minutes, not much to look at, but price tends to rise. After about a day, it's up about 1%. On average, price rises 1% whenever global accounts long is below 50 and most of the market is in shorts. Now, here's something that might shock you. It might not be surprising that price moves against retail accounts. Shocker. What happens when we look at the whales? What this is the top 20% of positions by size, long or short. So what this is going to tell us is this is not accounts. Let me reiterate this. This indicator that I'm about to show you is not the accounts, but it's saying whenever the top 20% of individual positions, what makeup is 80% long or 20% long of that top 20% of positions by volume. So basically this is saying of the largest positions on Binance Futures, are they mostly short or are they mostly long? That's all. What you will see next will shock you. I say in the most clickbaity kind of title way. What you typically see is when traders are generally quite, I think I should put this a little bit higher, but when the whales, when the largest positions are typically longs, price tends to actually fall. I'll show you guys a little bit more extreme. So this is going to show you whenever the largest positions on Binance Futures are over 60% long, what happens? So this happens about 3% of the time, and on every single time frame, price has fallen. And it gets even crazier. Over a 3-day period, price on average has fallen over 6%. When the largest positions are this bullish, price just dumps. That's something that I found, and I was pretty shocked because I will admit, about a year ago, I said, hey, you should be trading with the whales and against the retail traders, and actually you probably should not be. What I'm seeing here is that the largest traders, the retail traders, price moves against you, you know? And that's not me complaining. That's me telling you a truth that you can take advantage of. Now, let's do the inverse here, shall we? Let's do 52. Whenever the largest positions on Binance futures are mostly made up from from shorts, pardon me, what tends to happen to price? So price tends to rise. Yeah. So price tends to move against the largest traders on Binance. Weird. But it's just the way it is. All right, let's go into some other fun ones of looking at people's pain. I think the last one I want to show you guys is funding rate, because when I backtested this before making this video, it was like the number one indicator. So what I basically found from funding rate is that whenever the funding rate is above 0.03, price will almost always, on average, important distinction, on average, fall. So I'm going to show you guys exactly what I mean by that. So for those who don't know, this is the 8-hour funding rate on Binance futures for Bitcoin, and it has been over 0.03%, 12% of the time. Right here, we can see that. On average, price falls every single time. So when the funding rate is positive, that means that there's a premium, meaning that longs have to pay an extra fee in order to be long, and shorts get paid. Basically, it means the market is trading above spot. Futures are trading above spot. When futures trade above spot, price tends to fall on every single time frame. Here's a few good examples of that. This would have been an excellent time not to enter short, that would have been not good, but to buy puts. Had you bought a put, which is an option contract that bets on the market falling, a medium-term put or a long-term put that expires maybe in June or July or maybe even December 2021, you would have made a fair amount of money, especially if you had bought at 60K and then gotten, sold your put at like 30K when price was 30K, you would have made a lot. Or even if you had done an end-to-end trade. An end-to-end trade is when we take the extreme of one to enter, and then we take the extreme of the other side to exit. Doing that here would be entering around 60K for a put, and then getting rid of that put when funding rate went really crazy low, which was around here. 2020 hindsight, but it just kind of shows that there is a lot to learn from 2020 hindsight. This data, I mean, with 389 days of data in 112,000 5-minute candles, you can learn a lot. 112,315 candles, we can learn a lot. And what did we learn? Well, basically, what I found out is that the 3 best indicators to use, weirdly enough, is global long account percent. You can get that on Coinalyze or on TRDR or on Hyblock. The second best was funding rate. So whenever the funding rate is generally pretty positive, typically it's a time to buy a put or short, or at least exit your long position. And then the third thing to talk about is the top 20% of positions, so the largest positions. When the largest positions are generally bullish, we want to be bearish. When the largest positions are generally bearish, we want to be bullish. This just shows that a contrarian kind of trader, even a bot that trades contrarian, using options contracts, you do well. It does really well. And in my previous live trading video, I even showed you guys how to do that. Although I use mostly open interest. Use this to your advantage. I love Hyblock. I really love doing a deep dive into data. And I hope that this was a good alpha leak for you guys, giving you guys a big edge, because backtesting, I think, is very important. You should always be backtesting and forward testing, meaning backtesting is what we just did. And then forward testing is using a little bit of capital to test if these strategies work over the short term, medium term, or long term, whatever you want to do. That's going to do it for this video. Check out those indicators that I mentioned, because they are pretty good, to say the least. And with that, happy trading. I'll see you guys in the next one.